Welcome back to Alpha Recap. Ryan here. We're walking through the market action from May 12th after the bell. Quick heads up. Markets closed mixed today, with a clear two-track story across sectors. As always, if you have questions, you can reach us at stockalpha.ai.
Thanks, Ryan. Good to be here. There was a lot packed into the day. Infrastructure headlines, AI-related data center moves, and a bunch of regulatory and geopolitical noise.
So, what really stands out here is that split. The parts of the market leaning into long lead investments versus the parts getting dinged by policy and headline risk. Tell us the top themes in plain English.
Sure. First, explicitly large infrastructure commitments, from grid upgrades to corporate battery programs, were the headline drivers for utilities, materials, and some industrial names. Second, the footprint of AI is increasing demand for power and connectivity, which is feeding into telecom and data center investment. And third, regulation and geopolitics created episodic volatility, especially in healthcare, finance, and some energy names.
Right. And you had specific data points that really painted that picture.
Exactly. For example, reported plans included about $29 billion for grid upgrades. Ford formally launched Ford Energy and pledged at least 20 gigawatt hours of battery energy storage. That's a meaningful corporate commitment to grid storage. And on the logistics front, air cargo rates reportedly surged about 30%, which is a very tangible input to inflation and supply chain stress.
And consumer price inflation ticked too, right?
Yes, the consumer price indicator moved to about 3.8%, which adds another layer to how supply chain costs and logistics move through corporate margins.
Let's break sectors into groups. Who outperformed today?
Outperformers included utilities, technology, and materials and mining. Utilities saw positive momentum tied to renewables and grid investments, and a few large storage deals involving hyperscalers. Technology kept attention with enterprise AI hiring and spectrum approvals for satellite and connectivity players. Materials saw M&A, new project announcements, and recycling wins.
Yeah, that grid and storage theme really does glue a few sectors together. Stable or mixed performers?
Real estate, industrials, and consumer and retail were mixed. Real estate had large industrial deals and student housing activity offset by ongoing office questions. Industrials had capacity investments, but also were dealing with higher air freight and payroll adjustments. Retail had innovation stories, faster delivery, and new product rollouts, but inflationary pressures and some corporate moves made the trading uneven.
And the laggards?
Healthcare, finance, and energy showed more risk-off behavior. Healthcare was hit by the surprise resignation of the FDA chief and regulatory scrutiny in Europe. Financials were jittery on policy and political noise. Energy was balancing short-term fuel pain and geopolitical tightness against longer-term clean tech progress.
Honestly, I was a bit surprised by how much regulatory headlines moved healthcare today.
Yeah, that was meaningful. Leadership shifts at big regulators tend to inject uncertainty into approval timelines and enforcement priorities, which markets dislike.
Short reactions, quick ones. Big move in utilities.
Big move.
Tech stayed hot.
Right.
Materials getting real catalytic news.
Yeah, that tracks.
Okay, let's dig into the cross-sector connections. Start with the infrastructure and storage glue you mentioned.
So infrastructure is acting like a glue across utilities, materials, and industrials because of scale commitments. Corporate buyers like Ford, hyperscalers, and utility CapEx plans all point to sustained demand for battery components, lithium, vanadium, copper, and for construction capacity. Analysts note that when corporates act as anchor customers, project bankability improves, which can accelerate financing and execution.
And that 20 gigawatt hour pledge from Ford? How big is that in industrial terms?
It's meaningful. To put it in plain terms, 20 gigawatt hours is a sizable chunk of BESS deployment for a non-utility corporate program. It signals that companies outside traditional energy players are willing to sign on to long-term storage commitments, which changes where demand for batteries comes from.
Right. Next, AI driving power and telecom demand.
AI deployments are moving from experiments to scaled enterprise usage. Google's enterprise AI hiring push and spectrum approvals by the Federal Communications Commission for satellite and connectivity players point to heavier compute and low-latency network needs. That increases electricity demand locally and creates a new class of long-duration load, which is why utilities and BESS vendors are getting more attention.
So track data center siting and interconnection backlogs, right?
Exactly. Momentum indicates the companies managing co-location, that's power and proximity to fiber, will have an edge. Watch regional capacity constraints and utility interconnection queues.
Third cross-sector theme was logistics and inflation.
Air cargo rates reportedly jumped about 30%, which feeds directly into retailer and manufacturer cost structures. Higher freight costs can compress margins, delay industrial projects, and keep inflation readings elevated, which then flows into central bank calculus and market sentiment.
And finally, regulation and geopolitics remain the wild cards.
Yes. The FDA chief's surprise resignation, telecom component restrictions tied to geopolitical issues, and continued scrutiny of crypto and drug manufacturing in Europe all create episodic, idiosyncratic risks. These don't necessarily change long-term fundamentals, but can trigger re-rating days for specific subsectors.
Let's move to the biggest single moves from the day.
The most consequential items were Ford Energy's launch with that 20 gigawatt-hour pledge, the reported about $29 billion grid upgrade plan, and a string of technology sector developments, hiring for enterprise AI and spectrum approvals, alongside recycling and M&A in materials.
Walk me through why Ford Energy matters beyond the headline.
When a major automaker formally enters the energy storage space with a public deployment pledge, it does a couple of things. Analysts note it broadens demand beyond hyperscalers and utilities, supports secondary markets for battery manufacturing and recycling, and can create more predictable offtake for project developers, making it easier to finance projects.
And the about $29 billion for grid upgrades? That's a big validation for utility CapEx?
Yes, scale investments in grid modernization validate narratives around resilience and electrification. For regulated utilities, approved capital spending and rate mechanisms can translate into multi-year revenue visibility, assuming permitting and local approvals proceed. Project timelines remain a gating factor.
Quick side note, eBay stuff was in the news today?
Yes, eBay reportedly rebuffed about $56 billion in takeover interest. That produced a mixed reaction across consumer and tech names. It's one of those headlines that gets attention, even if it's not market-moving at a macro level.
Short reactions. Quick, again. Supply chains remain sticky.
Yep.
Regulatory calendars matter.
Absolutely.
Okay, what about materials and recycling? That's more tactical, right?
Materials saw positive operational data, fresh drilling, recycling improvements, and M&A. Data suggests recycled metal upside is meaningful where primary supply is constrained. Analysts note that recycling can shorten time to usable material and reduce exposure to raw mining bottlenecks.
And consumer retail, faster delivery stories, and new products like those hemp beverages from Target. How did markets take that?
Markets treated those as indicative of competitive pressure and innovation. Shorter delivery windows and new categories can change customer behavior, but they also raise logistics costs. So the winners are likely the firms that can monetize speed or have superior logistics economics.
Let's be explicit on risks. What should listeners watch next week?
First, regulatory appointments and rulemakings. The FDA leadership change and telecom approvals could cause headline-driven moves. Second, freight and logistics indicators. Persistent air cargo spikes or port congestion are early warning signs for margins and inflation. Third, geopolitical flare points that move energy prices or shipping lanes. And finally, project execution risk in infrastructure plays. Permitting, offtake commitments, and construction timelines will determine whether headlines turn into earnings growth.
Let me ask. Analysts are saying infrastructure commitments are increasingly credible. But how fast can permitting and capital deployment actually move?
It varies a lot by jurisdiction and asset. Momentum indicates developers and utilities are getting more traction with regulators and lenders, but permitting timelines and local opposition still create meaningful execution risk. So, analysts note, the potential for durable demand is clear, but realizing it at scale is not instantaneous. Expect a mixed pace across projects.
Good. A few actionable but non-directive points for listeners to file away?
Sure. Analysts suggest reassessing exposure to long-duration infrastructure through a risk-adjusted lens, watching energy consumption patterns around AI rollouts, preparing for headline-driven volatility in regulated sectors like healthcare and finance, monitoring logistics cost signals as early inflation indicators, and prioritizing quality of earnings in consumer and retail names as delivery economics tighten.
Those are solid observations, all framed as market data, not advice.
Exactly. This is informational. Analysts note these are the key inputs to track, not personalized advice.
Final quick takeaways for our listeners. Give me 3 bullets to walk away with.
1. Infrastructure and corporate storage commitments are creating durable demand across utilities, materials, and industrials, but execution matters. 2. AI is shifting the demand curve for power and connectivity. Follow data center siting and interconnection backlogs. 3. Expect episodic volatility from regulatory and geopolitical headlines, which disproportionately hit healthcare, finance, and some energy names.
Perfect. If you want to read the full recap, check out the write-up. And a reminder, this was after the close on May 12th, so everything we discussed is historical market action.
Right. And if listeners want to dig deeper on any of these themes, they can use the Q&A feature at stockalpha.ai to ask follow-ups.
If you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai. Thanks for listening to Alpha Recap.